Hello and welcome to EBA Day TV, and today I'm speaking to Karsten Becker of Deutsche Bank, and we're going to be talking about one of the major topics here at EBA Day, which is Sepa migration. So can you give us sort of a rundown about the state of Sepa migration right at the moment?
It's actually pretty disappointing. If we look at the migration rates that we currently have, we only have around 25% of all credit transfers that are being processed as Sepa credit transfers Europe-wide. Given that we've had the Sepa credit transfer for more than 4 years already, it would mean that it would take us actually another 12 years to achieve full migration to Sepa credit transfer. If we look at the Sepa direct debit, the picture is even a lot more pathetic, if I may put it so bluntly. We're only at 0.5% of all direct debits being processed as Sepa direct debit. So that would take us another 500 years to achieve full migration. Fortunately, the European regulator has recognized that as well. They have come up with a regulation that now makes the migration from legacy credit transfer and direct debit instruments onto the Sepa equivalents mandatory. So we've now really come full circle. Sepa started as a regulatory project back in the year 2000 as part of the European Union's Lisbon agenda. It moved into the private sector with the banks organized in the European Payments Council creating the Sepa credit transfer and direct debit. And now it's ending as a regulatory project due to this end date migration.
Can you give us a bit of understanding for the implications of this regulation, specifically for corporates?
Yeah, the implications are actually such that, among many other things, the regulation stipulates that by February 1st, 2014, Sepa credit transfer and direct debit instruments have to be used for all sort of non-urgent mass credit transfers and direct debits in Europe. Out of scope of this regulation are currency payments. In other words, every payment and direct debit in a currency other than the euro, British pounds, Polish zlotys, Swiss francs, are fully out of scope. Nothing will change there. Also out of scope are urgent sort of high-value payments cleared through high-value clearing systems such as a Target 2, such as the EBA's Euro 1 or Step 1. What this means for corporates is actually pretty simple. By that date, February 1st, 2014, they must be able to send Sepa-capable transactions to their banks, because as of that date, banks among each other will only exchange Sepa credit transfers and direct debits.
What about for banks? You know, what's going to be the impact for banks?
For banks, first and foremost, it means simply being able to process a Sepa credit transfer or a Sepa direct debit is not going to be sufficient. Banks need to be able to handle Sepa credit transfers and Sepa direct debits on a massive scale, because again, all the legacy credit transfers and direct debits will migrate onto the Sepa instruments. So for a bank then, that means potentially enhancing the capacity on the client access channels, in their middle layers, in their processing backends. It can mean training for sales, for implementations, for customer service, for operations, to ensure that all these areas are fully aware what Sepa means for their corporate customers when they migrate to Sepa. And it can also mean that banks should think about what value-added services they want to provide to their customers to make sure that the migration of their clients onto the Sepa instruments will be as easy and simple for their customers as possible.
What about Deutsche Bank's recommendations? I mean, what does the bank recommend for both corporates and banks?
The recommendation is very simple actually for both. What's going to be the difficult part is how to implement that for both banks and corporates. For banks, I would say take a really good hard look at your current Sepa processing infrastructure and make sure that it's able to handle mass volumes on a massive scale. For corporates, if you haven't done so already, start your Sepa migration project today, because we have less than 2 years to go. And again, corporates by that date must be able to send Sepa-capable transactions to their banks.